Hello, hello. Oh, it's over there. Oh, it's over there. Send more money. Send more money. That is my Biden impression. I know it looks weak, but I did my best. Guys, tonight you are in for a treat. The most controversial subject everyone's been talking about, who's ever buying a home, selling a home, if they're a real estate agent lender, is the changes Biden is making to home buyers and homeowners with good credit. Are the changes real or not? Some of it is kind of stretched out, and some of it is actually real. What's going on, guys? My name is Min Win with What's a Mortgage. Welcome to our channel. The goal of our channel is to simplify home ownership. If it's your first time tuning in, do me a huge favor. Hit that subscribe or notification button so you are notified every time we go live or post new content. We go live every Monday night on Facebook and YouTube at 8 p.m. and we post daily tips on Instagram and TikTok. If you're not following us on our other platforms, please go ahead and do so. And if tonight brings you any value, do me a huge favor. Please share this video. If you know anyone who bought a home and they plan on refinancing in the future, tag them on this video. At the end of tonight's live, I'm going to show you the impact these changes are making to people who are currently homeowners that will refinance in the future. Okay? Thank you guys so much, guys. Let's get into it. So if you're on Instagram, please go ahead and go to our youtube.com/what's a mortgage, and don't forget to subscribe. All right, guys, let's do this. I got ended on here. Let me end on Instagram really quick, and we're good. All right, guys, hopefully you guys are having a great night. And of course, the most controversial question I've been getting in the DMs is, Biden's rules. Is it real? Of course, I brought this up in February. March 9th was my first video, but I did bring it up in articles. And that's why sometimes it's important to watch my daily market update. Sometimes it's for the rates, but sometimes there's changes that's happening in mortgage and real estate, and I want you guys to know about it. So definitely, you got to check out my market update. I post it every day at 12 p.m. on Instagram and TikTok. And I posted this in January and February, and everyone thought clickbait. I'm just using it. I'm, favoring one side of the spectrum, but I'm not. My goal is to put the information on it. So I don't care if it's Sleepy Biden or Orange Trump. If it's information that's going to affect homeownership for you, I'm going to post it. So don't forget to check out my other platforms if you're not already doing so, okay? So breaking down Biden's new rules. All right, so we're going to do a deep dive breakdown. I'm going to show you the breakdown, and I'm going to go over my conspiracy theory about it, all right? I want you guys to know I have conspiracy theories, and if you don't like it, keep it to yourself. All right, guys, so let's get into it. So breaking down Biden's new rules. What you need to know to be a successful homeowner. So we're going to go over rules, and we're going to go over strategies on how to get around some of the rules, or kind of, tone them down a bit, okay? So, of course, I watch Fox. I know, okay? I feel bad for Tucker Carlson today, but there's something that Fox posted that was wrong. And if news is wrong, I don't care which side of the spectrum you're on, I'm going to tell you. Okay, let's post it. Guys, Lakers score. If Lakers are winning, post the score. Thank you so much, living in San Gabriel Valley. The Lakers are down. Please don't post. It's going to mess with my head. All right, let's go next on one. So this is the clip everyone's been sending me, okay? New mortgage fee structure. 620 FICO score gets a 1.75 interest rate, 1.75 fee discount, okay? Conventional 740 FICO scores a 1% fee. This is not true. Completely not true, okay? There are some changes to the fees, but I'll show it to you in a second, but this is not 100% true. So that information, of course, makes Biden look really bad, and like I said, I'm not here to make him look bad, but this information is not 100% true, okay? But there are changes happening to the fees, so let's address that right away. So first, let's talk about these changes only affect, next slide, only affect conventional loans, okay? Conventional loans and refinance on conventional loans that will fund after March 1st. Of course, everyone is talking about May 1st. It is not May 1st. It is March, right? They're saying May, but a lot of the banks already started enforcing the rule in March. So starting March 1st. So if your loan hasn't funded and you're going with a conventional loan, purchase or refinance, this will affect you. Okay, so it's not going to happen with VA. It's not going to happen with USDA. It's not going to happen with jumbo, anything portfolio, and it doesn't happen with FHA. But my conspiracy theory says it is tied to FHA because at the end of the day, FHA loans are higher risk. So why would they lower a fee? Because the risk is higher unless they plan on subsidizing it somehow. Okay, that's just my conspiracy theory. Okay, so let's go now and look at the rule. So this rule came out. Here we go. The truth right here. It came out March 19th. FHFA announces update to the enterprise single family pricing frame. Okay, can we zoom this in bigger or no?
A little bit.
Okay.
Not a lot.
Okay. Let's read this thing right here together. The Federal Housing Finance Agency today announced further changes to Fannie Mae and Freddie Mac, the enterprise single-family pricing framework, by introducing redesigned and recalibrated upfront fees matrices for purchases, rate interim refinances, and cash out refinance. Like I said, it happened in January. It's taken into play May 8th, but every lender out there has already started. So if you go out there and you're buying a refinance conventional, it's going to affect you. And typically buyers with good credit, big down payments, and ton of equity go conventional. So somewhat it is attacking the middle class and upper middle class for sure. Okay, so it is real, but what changes have it made? But before we get into that, I want you guys to read another letter that came out in February. Okay, the mortgagee letter. Joey B drops another letter. Okay, the mortgagee letter. It says right there where it says subject: reduction of Federal Housing Administration annual. What's it? Oh. All right.
Sorry, I'm trying to zoom in. It's not letting me.
All right, let's back it out here. Let's back it. I'll read out here. Reduction of Federal Housing Administration annual mortgage insurance premium rates. So when you get a mortgage and the lender thinks you are high risk, there is monthly mortgage insurance. On a conventional loan, when you put less than 20% down, you are a high risk. So they charge you monthly mortgage insurance. Okay. On FHA, you are a high risk. That's the reason why you go FHA, and they're charging you monthly insurance. So they're lowering the monthly mortgage insurance cost to make homeownership more affordable for higher risk buyers. Okay, next slide. Where's others? No, where's the slide with the matrix? With the is it on that slide? Right there. Okay, no, actually, I'll go back. Never mind. Okay, so buyers who typically go FHA, okay? Here are the buyers. Thank you so much, living in San Gabriel Valley. So buyers who typically go FHA, 700 credit score or under, bankruptcies under 4 years old, short sales less than 4 years old, foreclosures under 7 years old, debt to income ratio over 50%, and buyers with less than 5% down. Those are your typical FHA buyers. Okay, so if you go FHA, that is your typical FHA buyer, and they are getting a discount, and that kicked in February. So if you're buying a home with FHA, your payment just got cheaper. So that's why I think a lot of people are upset, because buyers with the BKs, lower down payments, higher DTIs, that past bankruptcies, past foreclosures, and short sales, they're getting a better deal. They're getting cheaper monthly mortgage insurance. Okay, but they're not getting a discount on interest rate. They're not getting a discount on fee like Fox says. It's a discount on monthly mortgage insurance. The fee is paid once. This is not a fee. It's a recurring cost that just got lowered. So because of that, it allows FHA buyers to qualify for more home. And now it makes FHA payments cheaper than conventional payments with lower down payments. I say that again. With lower down payments, now FHA has cheaper payments than conventional, and we are going to break that down. Thank you so much, J.Y. Young. You give me amped here, okay? So here are the changes. So if you look here at this graph, and let me break it down to you. So I want you to pay attention. If you go with under 5% down, the monthly PMI used to be at 8.85. Now it's 0.55. See that 0.55 right there? So less than 5% down, you have 0.55. 5% down or greater, you're at 0.50. Okay? 5% down or greater, you're at 0.50. Okay? So back before the new rule change, monthly PMI for monthly MIP for FHA was 0.85. Now it's 0.55. When you put 5% down or more, it used to be 0.80. Now it's 0.50. Will it make a big difference? Let's find out. So here, looking at, this is an original FHA loan. If you bought your home today, and the PMI or the MIP was, some people, of course, going, oh, this guy's not saying it right. For FHA, it's MIP. For conventional, it's PMI. Okay, FHA MIP, $600,000 purchase, 3.5% down, with the rate of 5.75, APR 6.158. Your monthly mortgage payment is $45.80. Your MIP would be $417 today. Okay. Oh, Richie, why'd you have to tell me that? Okay, next slide. Now today, with the new changes on Biden's new rule, here are the changes. Okay, on a $600,000 purchase with an interest rate of 5.75, same APR, the mortgage insurance MIP is $263. The payment's $44.26. That's a monthly savings of $153 a month. In a year, that's $1,800 a month in a year. Okay, so $1,800 every year. Typically, people keep FHA's loans for about 2 to 3 years. So that's close to $6,000 in savings in 3 years with this new program. So this is my conspiracy theory. If they're lowering an expense that's not going away, especially the risk, okay, someone has to pay to absorb that risk. That's just me. Thank you so much, MVP Reeves. So you guys understand that? So someone has to pay. And my conspiracy theory is that they're taking it probably from conventional. But on conventional, even with the lower FICO scores, they made the rate better as well. But someone's got to pay. Okay, so that's the benefit for going FHA. Now let's look at the conventional buyers. Okay, let's go conventional buyers. So who's paying? Conventional buyers are paying. They're paying with something called the loan level pricing adjustment, right? So loan level pricing adjustment. So when you get a home loan with a conventional mortgage, there's already loan level pricing adjustment. You might not see them all, okay, but they're in there. So when you got them, oh my gosh, they're charging me all this. They were doing it before February. They just increased some of the fees so that you pay more so that someone else benefits. All right. So now let's look at this heat map. This is the heat map everyone is looking at. When this heat map is not 100% accurate. Okay. This heat map right here is not 100% accurate. Okay. So pretty much, majority, they've done a poll. Majority of the buyers who are going conventional fit in the red, orange, and yellow framework. So that's where the mass of conventional home buyers fit. So if you fit in the mass, you are paying more than you did before February. Prior to February, you were paying a lot less. And this is one reason, not the only reason, why right now, with the 10-year bond being at 3.5, you're seeing higher interest rates than you did back in February. When you saw the 10-year bond under 3.5, you saw lower rates. Now you're seeing the 10-year bond above at 3.5, maybe a little bit under today. You're still seeing rates in the high 6s, low 7s. When August happens, it's going to make it even worse. But this is why you're seeing FHA rates pull back. You know, someone like try to clown me and say, "Oh, you're not doing it right because you know that Biden." Everyone thinks that FH or lower FICOs are 1% better in rate, and I'm just subtracting the rate. I'm not subtracting the rate. I am putting the scenario in something called Loan Sifter, where all mortgage brokers shop for the best interest rate for home buyers, right? So I put it in there, and because of these LLPAs, and of course the spread right now, FHA rates are about almost 1% better than conventional loans. With this LLPAs, it's pushing the rate higher to cover these LLPA fees. That's the reason why when you buy a home with a conventional loan right now, you see higher rates because of the spread is higher and because of these loan level pricing adjustments. And you feel it the most in the middle of the red, okay? Let's look at it really quick. Let's zoom in on it. Okay, no, we'll have to zoom. Okay, that close. So you see where this red is right here? This red area? That's where, when I talk to you guys, the bigger down payment, you'll feel the heat more. You look at the green areas. Yes, the lower down payments, you're not feeling the heat as much, but typically people with good credit aren't going to go with the lowest down payment. There's still adjustments out there. They're not feeling the heat as much. So when you're looking at 5% down or more, you're going to feel the heat worse. If you're going to go with a 3% down, okay, or under 5% down, the risk adjustments actually got better. So their strategy is put less down now and pay and put the rest down later on. We'll talk about that in a second. But with this new changes, you're gonna feel less heat putting lower down payment, but you will have mortgage insurance, monthly mortgage insurance. But then, like I said, you can put the difference down later. You can only do it where we'll go in a second. You can put a lower down payment now, increase a bigger down payment later, like let's say 20% down, get rid of the PMI. But if you increase the down payment, it's not going to drop your monthly PMI. So the trick doesn't work with a lower down payment and increasing the down payment by a bit. You got to wipe out the full PMI for it to work. Okay. So these are the changes that's happening. Now let's look at the comparison. Okay. A true comparison. Let's zoom in on this one. This one, let's see if we can zoom in, huh? Okay. Let me go to the first section. Let's go to the front section.
I'm trying to. Just give me.
Okay.
Let me.
Give me 1 second, guys.
Just this green section.
Yes, green section here.
Let me go.
Can you just back it out a little bit? Let me see if I can. Okay, so if we're looking at this section here, I don't know if you guys can see it or not. Let me take over the mouse. 740 credit score. There used to be a quarter adjustment. See that quarter right here? 740 credit score, 0.5% adjustment. See? 0.62 adjustment. See a quarter, 91, 90.01, 95. It used to be a quarter adjustment. Now it's 0.625. 0.5% adjustment, 0.75 adjustment. 0.5% adjustment, or see a quarter adjustment, 740, right? 740 score, 1% adjustment. A quarter here, 0.75 back. In February, it was all a quarter adjustments, 0.5% adjustments. Now they're going 0.875, 1%, 0.75, 0.625, and 0.5. So you see the increase, like I said, in the middle. And as you go down here, they improve. That is what Biden's talking about. And that's what the news is talking about on these lower FICO scores. If you go conventional, the adjustments are less. But if you go conventional with the lower adjustments, on the adjustments improved on the lower credit scores, but they're still higher than the higher credit scores. They improve the adjustments on the lower credit scores, but if you price it out with an FHA, you're losing all day long. So if you have if you have a loan with less than 10% down, it doesn't matter the FICO anymore, unless you're gonna go 3% down and you have a 760, 780. You might get a bet deal that matches FHA, but the PMI is gonna be more expensive. And now with a cheaper FHA PMI, you still might lose, but definitely talk to a lender. But you can see right there is that these adjustments really change the game and make these fees higher. That's why you don't see these lower mortgage interest rates. All this makes sense? If it doesn't, fam, I do apologize. We can go through it again. But so you guys see, on the old one, which is the green one up here, the 740 credit score, the average FICO score going conventional, 720 to 740. The adjustments here, you'll see are a lot lower than down here on the new changes. And that's why you're seeing the higher rate. Okay? But the big one, for everyone who hasn't bought a home yet, starts in August. And typically, this thing released in March and wasn't supposed to take effect till May. So I'm assuming the August one will probably take into effect in June or July. And when August comes around, there is one more adjustment. All these adjustments aren't that bad. Yeah, they are. They're going to change the rate between an eighth to 1/4%. We're going to show you the big difference. So imagine you worked your butt off to save a big down payment, to have good credit. Now getting charged higher fees in your rate. Okay, the fees were there before February. The fees just went up. So like, these fees are new. They just increased the fees. You don't normally you only see the rate, but now you'll see why is conventional rate so high. You know, some of you guys message me, Min, what's going on here? If unemployment's going up, inflation's coming down, why are interest rates not coming down? A lot of it is the spread, which we'll talk about another day, but also it's these loan level pricing adjustments that's keeping conventional rates higher. You see FHA is at 5.75 today, and conventional's at 6.875. Okay, when if FHA is at 5.75, conventional should have been at 6.5 or even better. Okay, typically off by 0.5%. But in August, the new LLPA for debt to income ratio. Oh my goodness. God, that just Lakers only up by 2 now. Come on. So with the new loan level pricing adjustment on debt to income ratio 40% or higher, there's a 0.375 hit unless you're putting in 40% down. Okay, 0.375. So now imagine you're putting 20% down. You have a 1% or 15% down. You have a 1% hit, 0.75 higher, and you have a 0.375 hit. So it's gonna make it really hard for you to get a low interest rate. It's better that you go with a lower down payment so you get a less hit there and just take that 0.375 hit, which we'll talk about in a second. But these are the changes that Biden's making, okay? So FHA didn't get a better deal. They got the PMI, the monthly PMI strength, right? They lowered the monthly rate for it to make it cheaper. On conventional, on the lower FICOs, they shaved off the loan level pricing adjustment, but they're still high, which makes the payments even higher on conventional. No, not higher, but high. So with conventional, with the higher credit scores, it just raised your rate to absorb these fees so that it can compensate for the lower FICOs. And I believe it's going to compensate for FHA, even though they might not say that, but the rule came out in January, all of a sudden February, this other rule released for some reason, right? I'm just saying. So now let's look at the scenario, okay? Today, this was priced out on April 24th, 2023, okay? So look at your conventional loan, okay? Conventional, 5% down, 740 credit score, okay? 6.875 today. Payment is $46.78. Because of the loan level pricing adjustments and the spread, payment's $46.78. Look at this FHA payment, $600,000. Lower down payment, 3.5% down, so you can use the rest of the money, pay off the upfront PMI if you want, okay? Loan amount is higher. Interest rate 5.75, so almost a 1.125 better on rate. And look at the payment, $44.26. That's a $250 difference. $250 difference. If you want to still go conventional, you're going to pay more. You don't have upfront PMI, and your monthly PMI does fall off. That is the benefit of going conventional. But you are going to pay $250 a month more. And I know right now inflation's at 5.6% core CPI. So eventually it has to come down. So I know there'll be refinancing in the future. To me, I would rather go FHA because I know I'm going to refinance my PMI off. Same thing with conventional. Okay, I can refinance conventional later on. I want the savings now because inflation is out of control. And with an extra $250 a month, you can probably qualify for another $25,000 more home. Okay, now let's look at the 5% versus 5%. This was priced out April 24th, 2023. Okay, conventional 5% down, hasn't changed. Payments $46.78. Okay. If you want to compare side by side, FHA 5% down, right there, rate 5.75 today. Look at the payment, $330 a month. $330 a month. The typical person is probably gonna keep their FHA for 3 years. That's almost 9 grand in savings. I'd rather pay the upfront PMI and refinance later on. Okay, that's what I would do. The monthly savings is king right now. If you are a baller shot caller and you don't plan on refinancing again and you don't mind paying $330 more until your PMI falls off, which is an extra $200, even with the PMI falling off, it's $200, your payment is still higher than the FHA payment. Go back to that thing again. Go back to that slide. Guys, for everyone who was like, oh my God, FHA, you'll have PMI forever. Look at the PMI on conventional. Is that not mind-blowing? I'm 100% pro conventional, by the way, FYI. So even with the PMI falling off of $209 a month on conventional, your payment is still cheaper on FHA. And one thing a lot of people don't pay attention to, if the rate is better by 1%, when you make a mortgage payment, more of your money goes towards principal than interest. Let me say that again. On an amortized schedule, when you make a mortgage payment with a lower rate, you pay more principal than interest. So if you are a ride or die hard conventional, maybe go with a lower down payment to not have some crazy hits, to absorb some crazy hits, okay? But so far, if you're gonna buy your first home and only living in it for 3 to 5 years, FHA might be the better route instead of going conventional and getting penalized with the penalties that Biden put out there, okay? Now let's go 10% down versus 5% down. 10% down versus 5% down, okay? So 10% down versus 5 on 600,000, 10% down, loan amount's 540, rate 6.875, okay? Mortgage PMI 198, and the payment is 4470. 4470, okay? Now let's go 600,000, 5% down, okay? So you're saving yourself about $30,000 out of pocket for a payment of $43.45. So that's about $130 a month. So you got to decide. If you got the 10% down, do you put 5 instead and just pay $130 a month more? Save yourself 30 grand out of pocket. End of the day, it's your choice. If you're like, hey, I want to go conventional anyways, just understand you will pay more upfront because these are Biden's new rules. So if you decide you still want to go conventional, I'm not pushing you to go conventional. I'm all about the cheaper mortgage payment because cash flow is king. Unless, like I said, you're a baller, shot caller, that money ain't a thing, then do your thing, okay? But if you look at conventional, you notice why conventional payments are now higher than FHA payments because of these new rules. Especially most buyers who want to buy and have good credit will go conventional. Of course, if you have lower credit and you want to go conventional and because the fees are lower, you're still going to pay more, okay? You're still going to pay more. And also, when you go conventional and you have under a 720, it is really hard. And you have under if you have under a 720 credit score and you don't have 20% down, it is hard to pass something called desktop underwriting. So you are pretty much forced to go FHA, which your payment is better. And this is what my videos have been all about. My videos have been all about, hey, with these new changes, instead of you being subjected to these rules with good credit buyers, going FHA is the workaround to get the lower payment. No one can stop you from going FHA. No one can stop you from receiving the lower PMI. So you have the rules in front of you. If you feel like I want to go conventional, I worked really hard to go conventional, and I want my PMI to come off, I'll never refinance again, then you might want to go conventional. But if you feel like you're not going to stay there forever, you want to do minimal down and have the same payment or lower, FHA might be an option for you. So if you have good credit, you either have the same payment or worse than someone with a lower credit score. Because lower credit, they're going to go FHA no matter what, all right? Hopefully that helps you out. So now let's talk about the 10% down. If you're going to go more under 10% down, I like FHA. If you found this information valuable, do me a huge favor, like this video. If you're not following me by now, please hit that subscribe button, all right, fam? So if you're putting 10% down or less, I like FHA right now, okay? If you're going to go 10% down or more, pull up the matrix again. So if you go 10% down or more, full screen, right? We saw the hit here. Average fight, it used to be a quarter, right? Look at that. 5% down, a quarter hit, a quarter hit, a quarter hit, 0.5% hit. Look at the new one at 740. Half a percent or 0.625 hit, 0.75 hit, 1% hit. If I was buying right now and you had 20% down or more, I would put the 5% down to only hit a 0.5% hit. It may not mean much to you, but if you might have to take that hit with that DTI hit as well, it's going to be nasty. So if it was me buying a home today, it only works on conventional loans. It does not work on FHA, VA, or USDA. I know some trolls reach out and say, this, not all lenders do it. Not all lenders do it because they don't do FHA, VA, or USDA. It only works on conventional loans. I used to work at US Bank, and most people who buy conventional, a lot of times they have their own money already to go conventional, even though they have to sell their house. So they buy their home, and then once their home sells, they input the rest of the money into the balance of the mortgage, and they do something called recasting. You can't recast till after 60 days, and you need to drop in at least $25,000. And when you recast, they recalculate the balance against your interest rate. So if you go with the lower down payment, with a good credit, you're going to get the lower rate. You will have PMI for 2 payments. After that, you can put in the difference of the money. They will recalculate the balance against your interest rate and drop your payment. So now, I know I hate this loophole, but these are the ways around it. If you're like, hey, I don't want to go FHA because you know what? When you guys buy this summer, you might see super low rates. And trust me, if you buy this summer, you might not want to refinance once I show you the refinance LLPAs as well. So if you're buying this summer and you're like, hey, I'm not a loophole person, this time you might be one, right? Don't forget your mortgage is the biggest investment you're gonna make. It's the biggest loan amount. It's the biggest amount of money you're gonna borrow. So you might need to use this loophole. Go 3 to 5% down. Okay, pray or work on your DTI, get it under 40%, or you're gonna have that hit, and then recast it after 60 days. Put $25,000 or more, and they'll recalculate it. If it's less than 20% down, your PMI is not going to change, by the way. Okay, and once you pay down the 20% down with the lower down payment, your PMI, right, your mortgage insurance premium will fall off. Okay, once you pay down 20% to 22% from the original purchase price, the MIP, sorry, I'm getting confused. The MIP will fall off only on conventional loan. You can only recast conventional. Okay, hopefully that helps you out. And let me show you an example. Of course, you know, guys, I always do examples. Look at here. So let's say you bought today. Okay, just example. I've done the math. If you add the DTI hit, it's about a quarter hit in rate. Okay, so 700,000, 20% down. Let's say today's rate is 6.875. Your balance is 560. Your payment is 4524. Look at that interest paid. 258,000. This is in 7 years. Most people will either refinance or sell within 7 years. Refinance within 7 years. They'll probably sell within 12 years. The average American lives in their home for 12 years. Okay. So let's look at the new one. So let's say we do the hack instead. Okay. Let's do the hack. Let's say we do the hack, and now we do the 3 or 5% down. 60 days we drop the 20% down. Your interest rate 6.625. Your monthly payment, $44.31. Doesn't look like a big deal, does it? The difference of savings, what, $100 a month? But look at the interest, $248,000. You are gonna pay less than $10,000. See, 2558, 24, 258,000, 248,000. That's a $10,000 difference in 7 years. So that's a savings. Now, are you a loophole person now? I'm a loophole person. Talk to your lender, find out the difference with 3 to 5% down, then the bigger down payment. If you're eventually going to do 20% down, less than 10% down, I like conventional. Okay. So those are the rules that Biden has released for conventional buyers. It's conventional rules. It's changing the loan level pricing adjustment matrix. It's going to really affect people in the 700 to 760 credit score, which most people fall under, with 5% down up to 25% down. Okay. They did raise some of the other adjustments, but they're minor, but those are the big ones. Of course, the big one though is the DTI one that happens in August, which will probably kick in sometime this summer. Okay. And I want you guys to know all that. And of course, pay attention if you plan on buying sometime this summer, right? Prepare for the August rule of the 3/8 hit to DTI. So you want to take your monthly gross income times it by 40%. You want to keep your full mortgage payment and any debt that is on your credit report under 40%. Because if it's over, you have that 3/8 hit. So if you plan on buying in the future conventional, try to get your DTI under 40. They don't count your utility bills. It's just your mortgage payment, anything that's on your credit report, and if you owe any court order payments or government order payments, like IRS payments, child support payment, alimony payments. If you lost a lawsuit and you have to make payments, those debts are added to a DTI. But no insurance bill, no cell phone bill, no utility bill, just anything on your credit and your mortgage payment. Keep it under 40% if you can. If you can't, if you're going to FHA, it doesn't matter. This is just for conventional loans because of that hit, okay? If you want, you can go to whatsamortgage.com and download our Ultimate Mortgage Guide. We have a DTI cheat sheet on there for you. From 60 grand a year up to 200. What you need to do to keep it under 40%, all right? So hopefully this information helps you out. Guys, my goal is to bring you value. I'm not here to bring you clickbait. I'm not here to scare you. I'm not here to do anything so you can so you're scared and you're forced to make a decision, all right? But last but not least, for everyone who stayed, who owns a home, and you need to refinance in the future. So back before February, purchase loan level pricing adjustments and rate and term refinance were identical. You saw all the quarter hits. Check out this humdinger right here. They got rid of rate term refinance. They call it limited cash out. That means you can get $2,000 cash out. Okay, that's the limited. But look at these adjustments. 740 credit score. Zoom in if you can.
Okay. Well, like
Okay.
it's awkward because it doesn't.
It's all good. It's all good. It's all good. So look at here. Back it out just a bit here. Let me back it out a bit. Let me back it out a bit here. Okay, so if you look at here, 740 credit score. Look at that 1% hit right here. 1 1/4 hit right here. 1 3/8 hits right here. Look at it. The more equity you have, the more they're gonna wax you. Look at that. Look at that thing right here. Back in the days, right? That's the new refinance one. I mean, refinance. You refinance, and they're getting ready because they know interest rates are gonna drop this summer or sometime by the end of the year. So they're already making adjustments for that, and they came up with this right when they know rates are gonna they're not gonna pull back today. I'm thinking May, probably a little bit, but June to July and August when we see the big drop. And this is how they're gonna get you. Okay. So just understand that if you bought your home from February 2022 till now, thank you so much about that Lakers score. I really appreciate it. Keeps me going. But this is how you're gonna these are the hits. And these are gonna, really change things. And that's why when I tell people I don't think we're gonna see rates in the 3s or low 4s or 4s, rates would have to drop significantly because these loan level pricing adjustments are going to eat up your lower rate. If it was me and you're going to keep that loan for a long period of time, you might want to buy out your pricing adjustments. If I'm keeping this loan for a long period of time, let me save up, let me buy out these adjustments so I can get a rate in the 4. Okay? Of course, I will keep you updated and you will know when I release rates. So those are the changes that are happening. So, so Biden's rule is taking into effect, but it's not like 1.75 better for 620 FICO score and anyone's over 700 is going to pay a 1% fee. That is not true. It's just loan level pricing adjustments to conventional loans, which will make conventional payments higher than FHA payments. And they lower the FHA payment and they lower the LLPA for conventional with the lower FICOs. So hopefully this information brought you value and now you know how to use this information to put yourself in a good position. 10% down or less, do what you want. I suggest FHA. More than 10% down, you might want to look into coming with a lower down payment and recasting, okay? And also get that DTI down, all right, fam? All right, guys. Hopefully this information helps you out. Let's go some Q&A here. If I brought you value, do me a huge favor. Please like and share this video. Tag someone in it that you know is going to refinance or buy in the future. Also, please subscribe. Hit that notification button, all right? For those of you who want to get a hold of me, hey, man, I love what you said. I want to go over payments with you. Can you break this down to me over the phone? Give us a call. 714-790-9697. 714-790-9697. You can call. For all the shy guys, shy girls, and shy people out there, send me a text message, all right? Let's go with some Q&A here really quick. What up, Kitty Cake? Haven't seen you on forever. Are you Biden? I am not. Yes, Ghost Tesla, you are smart. Marvella was good. Andrew, thank you for coming from IG. Brandon, thank you for coming from IG. Hi, I'm new here. I would like to know what's the difference between conventional loans and FHA loan. Which one is better for a higher credit score? So, Paulina, we already went over. If you are going more than 10% down, 15 or 20, conventional long-term is better. But right now, with all the craziness, if you're going to go 10% down or less, I like FHA because it has a cheaper payment. All right? My credit score is over 800. Should I apply for a credit card before I apply for my home loan to decrease my credit? Anything over 760, Marco, 760, if you really truly have an 800. I've only met probably like 20 people that have an 800 or 20, less than 20 people, okay? You might want to see where your credit stands. Most people are going to be between 700 to 760, and they're smart. That's why they created all the hits where majority of the mass of the good credit is at, okay? Thank you so much, living in San Gabriel Valley, to subscribe. Tasha, hi, I want to know what type of loan can I get for an investment property that needs renovation. So, conventional has renovation loans. So you can buy a home with a conventional loan, and they do have a renovation program. I think I call it I forgot the name of the program, but conventional, Fannie Mae and Freddie Mac, I think it's called the Home Point or something like that. But if you want to DM me, I'll send you both the programs. You're going to have to put down 15 to 25% down, and they will loan you money for the renovation, okay? You can use it to convert units, though. All right, hopefully that helps you out. What's the best program for first-time homebuyer, good credit? And I want to avoid PMI. If you want to avoid PMI, go with a conventional loan, and you can either buy out the PMI or do lender paid, okay? Hopefully that helps you out. Hi, Paulina. I'm new here. I would like to know what's the difference. We already answered that question. Kitty Cake. Look at conventional. Look at you. Answering questions for people. Thank you so much. Kitty Cake's been on it for a while. Thank you so much, living in San Gabriel Valley. I really appreciate you keeping me updated with the scores. Thank you so much, Vanessa. Appreciate that. See here. David, what's the best program for a first-time order? Would you answer that already? Woo, Lakers are up, man. I don't know how Lakers let them come back. LeBron hurt his knee. Oh, my God. Is LeBron still in the game or not? I'm new here. He's still in the game? All right, cool. Reeves MVP, Curry MVP. Mark Albano, we are going to put 5% down on a new build in December, and the DTI is 21%, over 800 credit score. I would go 800. I'd go conventional. If you truly, Mark, have an 800, I would go conventional because the PMI is almost nothing, and your DTI is 21, so you're not really going to get hit. You're going to have one adjustment. I would go conventional without FICO. If you were in the 740s, I would think twice. But 800, a solid 800, yes. What is more likely, the housing market crash or Anthony Davis stays healthy? I think the market. I don't want to say anything, Mark, but I think Anthony Davis staying healthy would be hard. What's the best program? Already we answered that. Thank you so much for the scores. Do I think it's going to get worse next year? I think, like I said, unless you don't believe it, inflation's at core inflation's at 5.6%. The reason why you haven't seen rates drop significantly is because these loan level pricing adjustments and the sticky core inflation is not coming down that easy. So as soon as inflation comes down, you'll see lower rates. Lower rates will bring more buyers in. But if they do something to build more homes, then no. But unless they don't, then yes, I think it's going to get worse. Oh, what happened? Nothing. I wonder why lenders, brokers haven't recommended FHA instead of conventional. Are they making more? They don't make more in conventional, Brandon. Ask them to show you the payment, okay? If they don't change their comp plan, let's say a loan officer is on a 2% comp plan, and he doesn't change it right now, if you have good credit, between 680 FICO score to 760, the payment's cheaper on FHA all day long, okay? If you hear any other questions, FHA rates are just lower right now. Also, do not use bill pay on your Experian to raise your credit score. Yes, Kitty King, I'm with you 100%. Dang, is Lakers losing now?
Yeah.
Oh my gosh. Oh my God, how's the Lakers losing, dude? Man, over here, don't get the my man 8 over. So over 8 over. Yeah, Chris, if you're 800 FICO, you won't get the hit. There are adjustments. They're minor. They're not really gonna hit you hard. It's the ones with the lower. Like I said, most people are between 700 to 760. All right, that's where you hit the worst. Okay. All right, guys. I really appreciate everyone who watched, liked, and commented. Do me a huge favor if you're not following by now. Please hit that follow button, all right? We want to end all our episodes with our attitude is gratitude. Without you, there is no us. So thank you guys so much. Have a great night. And don't forget, if you want to reach out to us, give us a call, 714-790-9697. Give us a call or send us a text message. If you have a loan estimate you would like us to review, please email it to info@whatsamortgage.com. All right, guys, enjoy the night. I will talk to you soon. Will cry myself to sleep. Oh my God, Lakers are down. Man, this sucks, dude.
Okay, Jaw landed on his hand.
Oh, John.
Jaw landed on his hand against this game like a play or two ago. So we're struggling.
Oh my gosh. All right.